You're listening to Sound Money from Casey Research.
Hello and welcome to today's show with me, Andy Duncan, coming to you from London. Our special guest today is Peter Schiff, the CEO and Chief Strategist for Euro-Pacific Capital and the host of the Peter Schiff radio show, who's coming to us today from Westport in Connecticut. Today we'll be talking about the economics of the mandated minimum wage, Peter's recent appearance on The Daily Show, which some of you may have heard about, and gold in the People's Republic of China. Hello, Peter.
Hey, how you doing?
Good, great. Now, it's very hard to ignore because it's all over YouTube, but as someone who used to listen to Wall Street Unspun, and as somebody who believes in Austrian economics, I'm just going to ask you a straight question. If the US minimum wage is hiked to, say, over $10 an hour, what effect do you think this will have on the US economy?
Well, it depends on how quickly it's raised up there. The slower they implement it, the less immediate and profound the effect will be. But the effect will be negative, as always is the case with the minimum wage. What the minimum wage law does is it makes it illegal for certain people to work. So if you don't have a lot of skills or you have no skills and you're looking to get your first job and you're hoping to get some on-the-job training, it makes it very, very difficult, if not impossible, for a lot of people to get an entry-level job, and so they're trapped in poverty because you can't get your second job if you can't get your first job. And it's your first job that prepares you for your second job, which prepares you for your third job. And as you learn more and as you acquire more skills and you become more productive and more valuable to employers, then you're able to earn higher wages. Eventually, you can earn a high enough wage that you can support a family. But you have to start out, at the bottom, and the government makes it harder and harder to do that with a minimum wage. There are some people that want a minimum wage of $15 an hour. I think if we had a nationwide $15 minimum wage that went into effect immediately, we might have 25 to 30% unemployment, even officially, in the United States, which would be a huge disaster, obviously.
Now, if it keeps people out of work, out of their first job, do you think people currently in work will be thrown out of work if the minimum wage goes too high?
Certainly. I mean, the minute they raise the minimum wage, there will be people who will lose their jobs. There are people that are now employed at $7.25 an hour, and if the minimum wage were $10 an hour, their employers would make the decision that it's no longer worth it, that the cost of employing them exceeds the benefits of their productivity, and so those jobs would be lost. There are some jobs that would end up being outsourced, where employers would look to have the work done outside the United States, where the minimum wage doesn't apply. In some cases, employers might look to substitute machines, computers or robots for human beings. I mean, maybe at $7.25 an hour, it makes sense to use the human being, but maybe at $10 an hour, the robot is cheaper or the computer. And so, businessmen will make those choices. Right now, they may choose labor, but if you push up the cost of labor, they may choose labor-saving devices. And, of course, whatever they end up doing, the economy will be less efficient than it is today because you're going to force employers to make choices that they might otherwise not make absent government interference. And so, yes, some people will lose their jobs, but on the whole, everybody will be slightly worse off because the economy will be less productive and less efficient. But the people who will be hurt the most are the people who are rendered unemployable by the minimum wage.
Yeah, there was a big story in the 1920s, wasn't there, about bellhops in Chicago, New York. They got a big pay rise, and then all the kind of building operators just brought in automatic elevators. Now, here's the big question. If the US minimum wage is hiked to, say, $10.10 an hour, do you think intellectually disabled people should be included in the mandate, or do you think no one should have a minimum wage anyway?
Well, the intellectually disabled are already exempted. I mean, that was, part of the problem with the interview I did on The Daily Show, which was edited in such a way as to make me look as mean as possible, even though they persuaded me to do that based on verbal and written representations that they would not take me out of context or try to make me look bad. But when the reporter, I put the reporter in quotes, maybe the comedian, when she asked me a question to describe somebody who would work for $2 an hour, she came up with that $2 figure on her own. I never suggested that anybody would work for $2 an hour, but she asked me who would work for $2 an hour, And of course, one of the first thing I thought of were the unpaid interns that work at places like the Daily Show. I said, well, unpaid interns would clearly work for $2 an hour because they're working for nothing. So $2 an hour would be a raise for people who are employed at $0 an hour. But because of the minimum wage law, it is illegal to pay somebody $2 an hour or $3 or $4 an hour for that matter. So they have to work for zero. And they end up working for zero. But I also reminded her that the minimum wage does not apply to the intellectually disabled. You can employ them and get a waiver from the minimum wage. And I said that there are many people now who are intellectually disabled who are working for $2 an hour. Some are working for less than $2 an hour, and it's perfectly legal because they are exempt from the minimum wage. But the reason that Congress exempted them is because they recognize that their productivity is so limited that if the minimum wage were to apply to the intellectually disabled, none of them would be able to get jobs. And since they're not really working for the money, they're working for the satisfaction, the self-esteem that comes from having a job. Most of the severely intellectually disabled are supported by other people. The income that they earn is ancillary to the benefits that they get from feeling like they're making a contribution. And I said if you were to apply the minimum wage to the intellectually disabled, they would lose all those benefits because nobody could afford to hire them because they really are they're very low productivity. And there's not much that they could do. But they can do some things. They just can't do things that are worth the minimum wage. The Daily Show made it out like, I want the intellectually disabled to work for $2 an hour, that somehow the minimum wage is preventing them from working for $2 an hour, that somehow they're getting paid a lot more right now, and I want to get rid of the minimum wage law so that they will be paid $2 an hour, which is completely false.
Now, after your experience on The Daily Show, would you recommend that anyone risks actually appearing on it again?
Now, unless you're a liberal and your point of view is exactly what they want, because they staged this as a debate between me and this other guy who was all in favor of a higher minimum wage, and they made him look as good as possible, even though what he said was nonsense. They let him rehearse his lines. They took several takes so he would get it just right. Nothing he said was taken out of context. So if you're a very liberal person and you believe in all this stuff, then sure, go on the Daily Show, But if you're a libertarian, if you're a conservative, if you believe in free markets and capitalism and not, big government, then don't go on the Daily Show unless you will be interviewed live, which I was interviewed live by on the Daily Show in 2009, where I was on, up there, for not a taped segment. And there, when I was on with Jon Stewart, just me and him, it was very different. I got a lot of applause. I got laughs. It was a very good segment. You can still see that on the internet if you just go Peter Schiff Daily Show and look at the 2009. So, yeah, if you can go on live with Jon Stewart, yeah, sure. But do not sit down for a taped interview with Samantha Bee. As I said, they had me sign a release, which is what they're hiding behind. I didn't even read it. But the release that I signed after I did this 4-hour interview, the release basically said that anything they told me or anything they said to me was invalid, that they had the right to do whatever they wanted and edit my 4 hours any way they wanted, and none of the representations or warranties they made to me, either to get me into that room or while I was in the room, applied anymore. They were all invalidated because I signed this release, which, after 4 hours and you're on your way out the door, I didn't want to read this lengthy release that had all this stuff written in it, where they could, make me look as bad as they want and edit me out of context. But we demanded that they release the entire 4 hours, and of course they refused to do it. And because they don't want people to see what I actually said, because what I actually said makes a lot of sense. If anybody listened to the 4 hours, they would come away thinking that the minimum wage is the worst law we've ever passed, and it needs to be eliminated right now. And they would see a very sincere, intelligent, caring individual, right, who actually understands the consequences of these government laws. But that's not what they wanted. They wanted people to see me the stereotype of a rich, out-of-touch, greedy, bigoted man who doesn't care about anybody but himself and who wants to exploit people for his own benefit. From my perspective, if they raised the minimum wage to $15 an hour tomorrow, I would make a ton of money off that. It wouldn't make my life worse. I would be, it would make the price of gold go way up. It would make the dollar go down. So my gold stocks would go up. My oil stocks would go up. My foreign assets would go up. My business would boom because the U.S. economy would be such a disaster. More and more people would want to send money to my brokerage firm to get the money out of the U.S. So personally, the best thing that can happen to me is a big increase in the minimum wage. But despite that, I'm against it anyway because I know how bad it is for America. And, the people who will suffer, as I said, are the people who lose their jobs and a lot of other people who are going to have to pay much higher prices because what happens is when you have the minimum wage, output goes down and prices go up. So you have a smaller quantity of goods provided, but the price goes up. Now, for me, it doesn't matter. I don't care if my hamburger is $10 or $20. I can still afford it. It doesn't matter to me. It doesn't matter if my grocery bill doubles or I can still pay it. But there's a lot of people who are living paycheck to paycheck. People that are lower income people. They can't afford to have their grocery bills double, right? So that's who those are the people who I want to protect by not increasing minimum wage. It's not about me. I'm going to be just fine if they raise the minimum wage. It's the middle class and the working poor that will suffer the most by an increase in minimum wage.
Now, speaking of jobs and speaking of the economy, the Federal Reserve has a dual mandate of both stable prices, which is interesting, and maximum employment. Now, it's actually started to taper down from $85 billion to $75 billion a month. But do you think weak US jobs data in the last couple of months will reverse this tapering process and take them back up again?
I think so. I think that's the Fed's plan all along. They've always said they were data dependent, and that just leaves them an excuse to come back in and ramp up the QE again and not only halt the taper but reverse it. But, they don't even claim that they have a dual mandate of where price stability is one of them because the Fed says that price stability is bad. They say that their mandate is to make sure that we don't have stable prices because they think that if inflation is under 2%, it's too low. Well, stable prices means zero inflation. Prices being stable means they're the same from one year to the next. If prices go up 2% every year, that's not stability. That's increasing prices. And that is now their goal. So the Fed has a dual mandate of employment and to make sure there is adequate inflation. So they're no longer trying to get stable prices. They are trying to prevent prices from stabilizing. They want to make sure that prices are anything but stable. They want to make sure they go up and go up by a sufficient amount. So that is their goal. Their goal is inflation. That's what they want. They're creating inflation. And as more people wake up to this new mandate of mandated inflation to make sure that inflation is never too low, that it's always getting higher, more and more people are going to get out of dollars and into gold.
Now, you've long followed a bearish dollar policy because you think the dollar is going to crash because of all this money printing. But the dollar does seem to keep strengthening against other currencies, even what you might call strong ones like the Singapore dollar. Can you explain this apparent strengthening, or is it just a race to the bottom and the dollar's winning it?
Well, a lot of it is because other countries are also printing a lot of money, so we're not printing money in a vacuum. If we were the only country printing money, then the dollar would have already tanked. But other countries are making the same mistake. But I think that the reason the dollar has not fallen even more, despite the fact that other countries are making a mistake, is that you still have this misplaced confidence in the dollar. You still have people around the world who just give the U.S. the benefit of the doubt. The dollar is treated as a safe haven, and it is the recipient of all of these safe haven type flows where whenever anybody is worried about something, they buy the dollar. And since there's so many problems around the world, there's a lot of demand for dollars, even though there are more problems in America than in the other countries that people are fleeing. But they don't see the irony of that. They just buy the dollar. And because so much money flows into the dollar, that keeps interest rates and consumer prices in America much lower than they otherwise would be. And it enables our economy to appear stronger than it really is, which helps perpetuate the perpetuating, cycle of money going into the dollar as a safe haven. But I think a lot of this optimism about the U.S. recovery is misplaced. I think people who have been expecting a recovery are wrong. And as the year progresses and we continue to get more disappointing economic data, eventually reality is going to set in that there's no recovery, and the Fed is going to have to do more quantitative easing, not less, and that is not what the dollar is expecting. And when currency traders realize that it's QE infinity, the dollar is going down, especially when they realize and they connect the dots. If the Fed can't end QE now, because just tapering it slightly is enough to bring the U.S. back into recession and put the stock market back into a bear market. If the Fed can't end QE now, if it has to ramp it back up, when will it ever end it? And the answer is it can't. That the Fed has created an economy that lives and dies by QE, that it can only survive so long as the QE is there to maintain it, and we need more and more of it. Just like any drug, you develop a tolerance. Well, the more the Fed does QE to stimulate the economy, the more QE it has to do to prevent it from imploding. So we need ever-increasing doses of QE, and when the markets realize this, all the support will drop from the dollar, because right now currency traders are factoring in an eventual tightening, an end to QE, and a normalization of interest rates. When they realize that QE is never ending, that it'll just get bigger and bigger and bigger, and that interest rates are at zero forever, that the Fed can never raise them because we now have so much debt that the highest rate we can afford to pay is zero. When they realize that's the predicament, the bottom drops out of the dollar, and then we're going to get the currency crisis.
Now, if we can talk about real money for a minute or two, instead of paper money, you've written that China's holding a lot of dark gold and could even be the second largest holder of gold in the world if Fort Knox is actually full. Now, if you're right about this Chinese gold, do you think that they could be trying to be the last person standing when all of these other paper currencies collapse?
Well, certainly China knows that the dollar's days are numbered. I mean, if anything, they're the ones that are, holding all the cards there. They can pull the plug on the dollar whenever they want. But they've got all these dollars, and they are, I think, quietly trying to accumulate as much gold as they can. I mean, China is the biggest consumer of gold in the world. They're also the biggest producer. But despite all the gold produced in China, they're still the biggest importer of gold as well. I think the Chinese central bank has a lot more gold than they've confessed to. And I think the main reason that China doesn't want to reveal how much gold they already own is because they're not finished buying. I think if the Chinese told the world how much gold they had, the price of gold would skyrocket because we would realize what they're up to, and they couldn't buy anymore. So I think they want to buy as much gold as the West is dumb enough to sell, and then therefore they'll maximize the amount of gold they have when the dollar collapses, and now they have gold to back up their currency rather than U.S. dollars.
Now, like you, I'm a long-term China bull, but they're also printing a lot of paper renminbi notes too. Before China does go into its long-term ascent, do you think there's going to be a crash in China with all of these kind of financial holes within Chinese banks?
China's progress, as great as it's been over the last 20 or 30 years, would have been that much better had they not pursued this monetary policy, had they simply let their currency go up and allow their Chinese consumers to benefit from its strength rather than American consumers, they would have a much more stable economy with a much higher standard of living for Chinese citizens. And of course, America would be very different over here. We couldn't have done all the things we did because we wouldn't have all these cheap Chinese imports. We wouldn't have all this debt all the money we've been able to borrow. So we maybe would have had to deal with our economic problems a long time ago if China didn't enable us to just postpone the pain. But, the deal that we made is like a deal with the devil because now the pain is going to be much more agonizing because the problems are much bigger. But I'm looking beyond that. I'm looking at to the end game for China. And even though it's going to go through some problems, I think that, the end result is going to be a much, much stronger, more prosperous China that will benefit Chinese citizens. And I think it's a great place for people to be invested who want to take advantage of the transformation of this society, because I do believe that China will dominate the 21st century the way the United States dominated the 20th.
Speaking of something else that has problems, the gold price has gone from $1,900 in 2011 down to about $1,275 today, which has people like Paul Krugman and other Keynesians are very, very happy. Do you think, though, that this is temporary and that all this does is make gold a really serious bargain, or is gold genuinely a bad loser?
No, well, I mean, gold had a bad year in 2013. In fact, maybe a bad 6 months, because it was really the second half of the year where all the damage was done. But so far in 2014, gold's off to a very good start. I mean, gold is outperforming the stock market. The best performing segment of the stock market is the gold stocks. I think gold stocks as a group are up about 25% this year. I know my gold fund, the Euro Pacific Gold Fund, is up better than that. In fact, out of the 73 gold funds that Morningstar tracks, my gold fund is ranked number one in performance for 2014. So I think this is a sector that Wall Street is overlooking, and everybody is still talking about the big decline we had in 2013. They're missing the big rally that's going on in 2014. In fact, if January and half of February is any indication, we're going to wipe out all those losses this year. Meanwhile, gold did great from 2000 to 2012. So you had 12 good years. You had one bad year. I mean, nothing goes up in a straight line. I mean, you're going to have bear markets, in bull trends. And I think that's what 2013 was. And in fact, we created so much negative sentiment in that decline that it's a perfect backdrop for a bull market to climb that proverbial wall of worry. And I think that the only sellers right now in the gold market are short sellers. I think all of the physical speculators who were long the market, they already bailed out. So the weak longs are gone. They've been out of the market for months. And I think the only selling is coming from the short sellers who are selling gold that they don't even have on the anticipation that they'll be able to buy it back cheaper. But what if they can't? What if the price just keeps on going up? Eventually the shorts are going to have to admit that they're wrong, and they're going to have to go into the market and buy. But when the only sellers become buyers, who is going to sell to the shorts? Where are the shorts going to get their gold to cover their positions? I don't know. I think the market's just going to go straight up. I think it's going to crash up because the speculators are going to want to come back in. The shorts are going to cover. The physical demand is still there. That never went away. And that's just been getting bigger and bigger and bigger. And once the market really starts to go up, that physical demand is going to accelerate because some of the people who want to buy more physical, maybe they're waiting for the bottom. They're not really sure if I should buy more yet. They hear all the negatives in the media and they get a little nervous. But once gold gets back up, 1,400, 1,500, when it's clear that it's going back up and it's turned the corner, then a lot of those hesitant buyers, they're going to come into the market. So you're going to have all this buying and there's no selling. Meanwhile, the mines are not producing as much gold because in all the negativity, the mines cut back on their capex, they cut back on their exploration. So where's the new gold going to come from? Meanwhile, I think all the gold that was liquidated in the second half of 2013 when they were dumping it, right? I think all that gold, and that was like 3 or 4 years worth of buying that was unloaded in a couple of months. I think all that gold was bought by China and other foreign central banks, and none of that gold will ever be for sale. Even if gold went to 2,000, the Chinese aren't selling. So, where's the supply going to come from? I know where the demand's going to come from. I don't know where the supply is going to come from. So I know the price has got to go way up.
Now, I know the shorts won't be able to borrow the gold from the German government because they've only managed to get 5 tons out of the Federal Reserve. Now, just a kind of last question on gold. The hard gold kind of Austrian economics world is split between those who think the gold price is being manipulated by central banks and bullion banks, and there are those who think that the market's just divine and it just goes up and down. Are you a kind of manipulation market man, or are you a free market man?
Well, I don't know how coordinated some of the attempted manipulation is. I do know that it does look very suspicious how you see these early morning raids where, there's no news and all of a sudden there's a huge sell order that comes in and, they don't even care where the execution is. They just want to drive the price down. So it seems like there is an effort to drive the price down, whether it's coordinated, whether it's happening randomly, whether somebody is doing it because they believe if they just hit the market enough, they can turn the trend. Maybe somebody with a big short position is trying to influence the market to move in a certain direction. But is there a bigger coordinating effort going on? If there is, there's no hard evidence of the conspiracy. Nobody has really come forward with credible evidence that says, hey, I was in the room, here's the memo, here's how we deliberately, are suppressing the gold market. But it is very suspicious when you look at the way the market gets sold off, the manner. I mean, normally if you've got a lot of gold to sell, you wouldn't just dump it all on the market in 10 seconds. You would try to sell it slowly and get the highest price you could. It doesn't make sense to just go into the market and with a market order and just crash the price so that when you sell, you get a lot less than you would have received had you sold it, in a more orderly manner, unless your goal is just to move the market down, and that's why you're selling a bunch. But if somebody is doing this, they're losing money because every time the market sells off, it goes higher, which means the sellers are selling out at a bad price. And it's, at some point, they run out of money. They can't keep doing that. They're going to be overwhelmed. This market is going higher. Even if people are trying to manipulate it, even if governments are trying to manipulate it, it will not work. I mean, all it can do is slow down the trend. They're not going to stop it. I mean, if the governments and the central banks could have stopped gold from rallying, they would have already done it. I mean, gold was $250 an ounce, in 2001, 2002, and it went all the way up to 1900. I mean, if they were trying to stop that rise, they didn't do a very good job because it happened anyway. And they might be out there, but it's still gold's still going to 2,000, 3,000, 4,000. It doesn't matter. The only thing you could do as an investor, if there really is manipulation, is just take advantage of it. I mean, I bought a lot more gold stocks personally towards the end of 2013 because of this. I mean, if gold prices never went down, I wouldn't have been able to increase my position at the prices that I did. So I look at it as an opportunity. Instead of getting upset that the price is being manipulated, use it to your advantage by buying more of a artificially depressed market. Either it's the stocks or the metal itself, because eventually the price is going to go to where it needs to go. And in fact, maybe because of the manipulation, gold will go even higher because you've got the bigger short seller and you've had the negative impact on the mining industry. If gold prices had been going up steadily, and if gold was $2,500 right now, there'd be a lot more money in the gold mining sector. They'd have a lot more cash, they'd be producing a lot more gold, so there'd be more supply to try to satisfy the growing demand. But they scared all that supply out of the market. So it's going to backfire and the price is going to go even higher.
Okay, it's been great speaking to you today then, Peter. Where's the best place our listeners can find you online?
Well, I'm all over the internet. If they want to listen daily, I talk about this stuff on schiffradio.com, 10 a.m. to noon Eastern time. It's a 2-hour show I do 5 days a week, so people can go there. If you want more information on my services in America, it's europac.net, EUROPAC.net is my brokerage firm. If you happen to live outside the United States, I have an offshore bank, europacbank.com, where you can invest with me through my mutual funds, my managed accounts. You can buy physical precious metals. You can even have a debit card, a MasterCard, that's backed by gold and silver that you can buy from me and store with my bank, and you can access it through your MasterCard. So we have lots of services that we offer through my bank to non-U.S. Customers. And if you're in the U.S., we've got plenty of services domestically at Euro Pacific Capital and my firm, Euro Pacific Precious Metals, which is where we sell physical precious metals.
Okay. Thank you for your time today, Peter Schiff.
Thank you. Have a good day.
You can subscribe to Sound Money on iTunes or sign up to our subscription services at soundmoneyshow.com, where you can also listen to our growing catalogue of podcasts, including interviews with Doug Casey, Rick Rule, John Mauldin and Jim Rogers. Thank you to Peter Schiff for joining us today, and thank you for listening. Until next time, goodbye.